This is a tutorial for the accountant assignment posting journal entries to general ledger accounts. I have the instructions on the right, and on the left is the Excel template that I'll be completing the assignment in. First transaction we have is on January 1st. Rex invested $5,000 into the business, memorandum 10. So looking at my accounts, I can see that this is going to affect the cash and bank account and Rex's capital. So over here on my Excel spreadsheet, I'll fill in the date first. So this is on January 1st. I only need to fill in the date on the first line of my transaction. In the description column, and really this should probably just be titled account title. You don't really need to describe the transaction. All you need to do is put in the accounts that are affected. One thing that we should get in the habit of doing too is putting our debits first. Generally, when you journalize any kind of accounting transaction, you should always have the debit going first. So since the owner is investing money into his business, the business now has more money to spend, so I know that my cash account is going up. So I'll put cash in bank, and we're going to have a $5,000 debit to that account. My credit then is going to be to Rex's capital, and that'll be a $5,000 credit. The capital account is an owner's equity account. Owner's equity accounts increase with a credit, so the owner just has more invested in his business now. The memorandum 10, we don't need to do anything with in this journal. A lot of times you'll see a column heading for document number. That's where that would go if you had a document number for this. But again, we just abbreviate it M10. But again, all we have is the post reference, which I'll fill in at the end when I post this to the general ledger, which is the second part of this assignment. My next transaction is on January 3rd, so I'll put in my date. On January 3rd, Rex transferred furniture valued at $2,000 to the business. So, since he's transferring his own personal furniture to the business, I know that the amount of furniture the business has is increasing, which is an asset. Assets increase with a debit. So my debit will be to office furniture in the amount of $2,000. No, I see my date got messed up here. I'll have to change the format of that real quick. Sorry about that. And my credit then will be to Rex's capital again. So he's investing his own personal asset into the business, so he now has more personal wealth in the business, so his capital is increasing. So Rex capital is going to increase with a credit. Third transaction on January 10th. Oh, I see my date's getting messed up again here. I'm just going to change the whole column quick. Okay, on January 10th, I issued check number 501 for $400 for grooming supplies. So I'm paying cash for grooming supplies. So since I'm increasing the amount of grooming supplies I have, which is an asset, I'm going to be debiting that account. Assets always increase with a debit. Since I'm paying cash, I know the amount of cash I have is going to be decreasing. Cash is an asset, and it decreases with a credit. So I'll credit cash in bank. Next transaction on January 15th, I bought grooming equipment on account for $2,000 from Pets Inc. Invoice 201. So over here, my date again is January 15th. And I'm buying grooming equipment on account. So I'm not paying cash for it today. I'll pay them at a later date. So my grooming equipment asset is still increasing. So I'll increase that with a debit in the amount of $2,000. And then my credit is going to be to the accounts payable account. So accounts payable is a liability account. It increases with a credit. So I'll put a $2,000 credit into accounts payable. My next transaction is on January 17th. On January 17th, I paid Pets Inc. $500. So I'm paying off part of this account payable. So I had previously purchased some grooming equipment on account from Pets Inc., which was an account payable. Now I'm paying off part of that account payable with cash. So my accounts payable account, which as I mentioned is a liability accounts increase with a credit, and it decreases then with a debit. So it's going to decrease with a $500 debit. and I'm paying cash for this. So my cash in bank account, which is an asset, is going to be decreasing with a $500 credit since I'm obviously going to have less cash to spend now since I just paid Pets Inc. this $500. Next transaction is on January 20th. On January 20th, Rex withdrew $1,000 cash from the business. So again, this transaction, the two accounts that are going to be affected are going to be cash in bank and Rex's withdrawals. So he's taking $1,000 in cash out of his business to go purchase something for his own personal use. So my debit is going to be to Rex withdrawals, which is the owner's drawing account. The owner's drawing account increases with a debit. And my credit then is going to be to cash in bank. So he took $1,000 in cash out of his business to go spend on something in his personal life. So that's $1,000 that the business now doesn't have. So it's going to decrease the amount of cash the business has. On January 29th, I paid salary to my employees, $300. So this one again is going to affect cash in bank, and looking at my other accounts, the next logical one is salary expenses. So this is an expense. Expense accounts increase with a debit. So I'm going to debit salary expense for $300, and I'm paying cash for this. So I'm writing the check, so it's going to decrease the amount of cash I have in the bank. So my cash in bank account is going to decrease with a $300 credit. And now for our last transaction is on January 30th. On January 30th, we deposited $2,000 that we received from a client for rendering service. So since I'm depositing cash, I know that's going to be increasing my cash account. So it's going to be a debit to cash in bank. What the credit is here isn't 100% clear. It really should be worded a little bit better here to make it clear why we received this money. It could have been for grooming revenue. It could have been for boarding revenue. It even could have been accounts receivable. It doesn't make it clear. Maybe it was some service we performed. Maybe it was last month, and we allowed them to purchase that on credit. So today they're paying us the cash that they owe us for our previously performed services. Since none of those are clear, again, it's not obvious. I would have accepted any of those credits. You wouldn't have lost points. But if I skip ahead, if you would have put anything other than grooming revenue, you would have ran into an issue here because in the general ledger, the only one of those three possible accounts that we could credit here that has a general ledger account is grooming revenue. So that's kind of a hint to me that it should be a credit to grooming revenue. But again, if you were confused on that one, it's really not your fault. It should have been worded better in the instructions here to make it clear why we received that money. All right, that is the end of part 1 here. So now we're going to go on to part 2, which down here in your guideline says to post each journal entry to the appropriate account. So what we do here when we post is we just start with our first transaction, which was a $5,000 debit to cash in bank. I'll go to my general ledger, go up to cash in bank, fill in the date, which was January 1st. For the transaction description, you really don't need to fill that in. You could explain what the transaction was for, but again, really that's mainly used for more complicated transactions that we don't really even get to this semester. So again, for any posting that we do, you really don't even need to fill that in. The post reference would be our general journal page, which again, if you go back here, it doesn't really tell us what the journal page is. So I'm just going to write GJ for general journal. And what I need to post is my debit amount. So I have a $5,000 debit to cash in bank. So that's $5,000 there. And I need to figure out what my balance is. So I had no balance before this transaction. So a zero balance plus a $5,000 debit means my debit is now $5,000. Back in the general journal, I need to fill in my post reference there now. And the post reference there is what my account number was. So I posted this to account 101. And this really shouldn't be dollars, so I'm going to change the formatting to this to take away that dollar sign. And we'll just make it general. There we go. And again, the point of the post reference is so that if you were looking at this, you could verify this amount by cross-referencing it to this post reference. So I could go look in my general ledger. There's account 101. There's that $5,000 debit. And again, if I was looking at the ledger, I could cross-reference it here too by looking at my post reference. I see, okay, this is from the general journal. So I'll go back here and look at my general journal. I'll just go on posting. So again, my next one is a $5,000 credit to Rex Capital. So I'll go to my general ledger, find Rex Capital. This was on January 1st. Again, I don't need anything in the transaction description. My post reference, it came from the general journal, so I'll just put GJ. Again, if you had the general journal listed with a page number, you would put the page number. So say it was on page 5 of the general journal, we just put a G5. But again, since I don't know the page number, I'll just put GJ. And what I'm posting here is a $5,000 credit. So I'll put a $5,000 credit here. And I have no balance before this. So a 0 balance plus a $5,000 credit equals a $5,000 credit balance. Back in my general journal, fill in my post reference, and then go on. My next one that I need to post is on January 3rd, a $2,000 debit to Office Furniture. So I'll go to my ledger, find Office Furniture. This was on January 3rd. Post reference again, GJ. It's coming from the general journal. And I'm posting a $2,000 debit. I have no balance before this transaction, so a 0 balance plus a $2,000 debit equals $2,000 on the debit side. Back in my general journal, this was account number 130. So I'll put in 130 and move on. Next transaction, I have a $2,000 credit to Rex Capital. I'll go to my ledger, find Rex Capital. This one is on January 3rd from the general journal. And now I'm posting a $2,000 credit. Now this one I already have a balance in here. I have a $5,000 credit balance. So what I need to do here is figure out whether this is going to increase or decrease that balance. I know that my capital account is an owner's equity, and for owner's equity accounts, that it has a normal credit balance, which means that it increases with a credit. Another way that I could tell is anytime that you have a credit and a credit, you add, a debit and a debit, you add, and if they're opposite, you need to subtract. So if you have a debit and a credit, or a credit and a debit, you subtract. Here I have a credit and a credit, so I'm going to add, and my new balance now is $7,000. $7,000 credit balance for Rex Capital. Fill in my post reference back in the journal. Go on. Next one, I have a $400 debit to grooming supplies. Again, this is similar to several of the other ones that I've done so far, where this is my first transaction in here. So pretty simple. I just put in my $400 debit. I have no balance, which means that my balance is a $400 debit balance right now as well. Go back, fill in my post reference. Next, I have a $400 credit to Cash in Bank. So I'll go to my ledger. And this was on January 10th. Post reference is GJ. And I'm posting a $400 credit. Now on this one, I have a $5,000 debit balance, and I'm posting this $400 credit. Anytime that I have a debit balance and I'm crediting that account, that's going to decrease my balance. And that makes sense because in this transaction, if you look back to the description, it said I issued check number 501 for $400 for grooming supplies. So it really should be decreasing my cash balance, which it does here when I post it. I'm going to go back to the general journal, fill in my post reference. Next one that I need to post is this $2,000 debit to grooming equipment. So I go in here to my ledger, find grooming equipment. This is on January 15th. And my post reference again is going to be GJ. And I'm posting I forgot the amount already, $2,000 debit to grooming equipment. No balance plus a $2,000 debit equals a $2,000 debit balance. Go back to my general journal and fill in the post reference. And next I have a $2,000 credit to accounts payable. So in my ledger, I'll go find my accounts payable account. This was on January 15th. GJ for my post reference. I'm posting a $2,000 credit. Have no balance, so 0 balance plus a $2,000 credit equals a $2,000 credit. Go in and fill in my post reference. Next one, on January 17th, I am posting a $500 accounts payable. So this is on January 17th. I just posted this credit here. And now I'm posting a $500 debit. So again, since I have a credit balance and I'm debiting it, this is going to decrease my balance. So my new balance now is $1,500 on the credit side. Go back to my general journal and post reference 205. Next, I'm posting a $500 credit to Cash and Bank. So I go to my ledger, Cash and Bank. This is on January 17th. Is that correct? Yes. Again, my post reference GJ. And I am posting this $500 credit. Sorry, lost my train of thought there. Again, this is anytime that we post a credit to an asset, it decreases the account balance. So I had a $4,600 debit balance. $500 credit to that account is going to equal a $4,100 debit balance. Again, this account is decreasing my Cash and Bank. I need to go back to my general journal and fill in my post reference 101. Next, I have a $1,000 debit that I'm posting to Rex Withdrawals. So here's that transaction. That was on January 20th. Post reference is GJ. And I'm posting a $1,000 debit. Again, I had no balance, so a 0 balance plus a $1,000 debit equals a $1,000 debit balance. I need to go fill my post reference. Rex Withdrawals was account 305. So 305 in the post reference. Now I need to post this $1,000 credit to Cash and Bank. So up in Cash and Bank, my date, January 20th. And I'm posting $1,000 credit. I have a $4,100 debit balance. A debit and a credit means that I subtract, and my new balance is $3,100. Back in the general journal, I need to fill in my post reference. Next, I have a $300 debit to salary expense. So I'll go find salary expense in my general ledger. That transaction was on January 29th, and that was a $300 debit. Had no balance before, so it means that my new balance is also $300 on the debit side. And my post reference for salary expense is 505. And then my credit in this transaction is to Cash and Bank. So again, up here in Cash and Bank, January 29th, GJ for my post reference, $300 credit. This is going to decrease my balance since I have a debit balance and I'm crediting it. So my new balance will be $2,800. Fill my post reference of 101. And then the last transactions I need to post. First, a $2,000 debit to Cash and Bank on the 30th. So this would be a $2,000 debit. I have a debit balance, so a debit and a debit means that I'm going to add. So my new balance will be $4,800. And again, that makes sense because this transaction was the owner depositing $2,000 that he received for performing some services. So it's money that his business made. So obviously that deposit is going to increase my cash balance. Back in the general journal, 101 for my post reference. And finally, I'm going to post this $2,000 credit to grooming revenue. So that was on January 30th. GJ, $2,000 credit, and my new balance is $2,000. So that's it for my posting. So I have all my, oh, sorry, needed to put in that post reference yet. Almost forgot that step. So 410 in my grooming revenue. So the last step that I need to do is to complete my trial balance. The point of the trial balance is just to prove that your debits and your credits equal. Real simple, all I need to do is list my account numbers and account names for any accounts that have a balance and then put down its debit or credit balance. So I'll just start at the top of my ledger. So I have Cash and Bank, account 101, cash in bank. And my balance at the end of the month was $4,800 on the debit side. Go to my next account, office furniture, account 130. And office furniture had a $2,000 debit balance. Grooming supplies, account 120. And grooming supplies had a $400 debit balance. Grooming equipment, account 140, $2,000 debit balance. Next account, accounts payable, 205. And accounts payable had a $1,500 credit balance. Next account was Rex Capital, account 301, and it had a $7,000 credit balance. Next account is Rex Withdrawals, account 305, with a $1,000 debit balance. And my last account, still have two accounts here. Grooming revenue, account 410, $2,000 credit balance. Put that in the wrong cell there. And I already forgot the account number, 410. And it had a $2,000 credit balance. Okay, I need to add a new row here because I'm going to run out of space. Or I could just move my total down one row. Let's do that. Kind of messed up my borders, but that's no big deal. Okay, and my last account then is salary expense, account 505. And salary expense had a $300 debit balance. Now all I need to do is add up these two columns and prove that my debits equal my credits. Again, your debit should always equal your credits. Every transaction that you do, you need to have equal debit and credit parts. You should never have an account that has, just two credits and no debits, or just two debits and no credits. I always have to have equal debit and credit parts. And as you can see from my trial balance, my debits do equal my credits. Each are $10,500. So that's how you would complete this transaction, or how you would complete this assignment. Again, you're going to have another assignment similar to this, just to give everyone a chance to prove that they know how to do this assignment now. Thanks for listening and thanks for watching, and let me know if you have any questions.